Good afternoon, Scott Redler, T3Live. Welcome to the day before the Christmas holidays. Now, a lot of people in the chat room are all asking me if I could have my alter ego, just, I guess, throw it to myself, and they all want to hear a little bit of noise. So I'm going to have my friend Red Dog here give you a little bit of an intro for me. Let's see what you got. Don't go off the table. All right, all kidding aside, listen, if you can't laugh in this environment, there's not much you could do. Because in this business that we are all involved in, there's a lot of frustrating moments. There are a lot of moments that are easy to just say celebrate, but you can never let the highs get too high, the lows get too low. And the last 4 to 5 weeks have been very frustrating. You've had a lot of gap ups, you've had a lot of gap downs, you've had markets that have closed strong, that open to the downside. You've had markets that looked like they were unbelievable, that you've had a big gap down. So there's been a lot of things that we've all had to contend with. So as we enter the end of the year, it's now, 2011. We are a few days before Christmas. We have a week before New Year's. And this is a time to reflect. Don't beat yourself up if you're not where you want to be. Don't beat yourself up if you had all these lofty expectations of where you think you were going to be at the end of the year, how much money you were going to make, because those type of goals are good to put in place, but then you have to measure the movement and measure what went on. At this point, the indices are about flat, and there were about 3 or 4 big moves that took place this year. And I'm not going to say they were easy to identify, because obviously if they were, we'd all be a lot richer and a lot more affluent, but we had those time frames. Just off the top of my head, I'm just going to roll them out real quickly. We had the move into the first quarter that looked really good. Then you had that head and shoulders top pattern that when we broke below 1250, that was really a really good short entry and a great spot to get rid of some longs. And we talked about it. I blogged it with Patty Dom, and we went to 1100. And obviously, in October, you had that reversal day that I pounded the pavement, of the day to take notice, the day to switch gears, day to cover shorts, day to get long, and we went from October 4th of about 1100 to as high as 1292. Another complexion change. And then lately, it's been a little choppy. And when you're a momentum trader, choppiness is tough because you don't get a lot of follow through. You get a few day moves, you get some scenarios to hang your hat on or whatnot. And at least this week, Tuesday, you had the wide range move, or the wide range bar, or the igniting bar, whatever you call it, because everyone calls it different, to the upside. Yesterday, you had the gut check where we came in. You could have bought some things on the dip. And then today, you had a bit of an upside move, some follow through. So at least this 3-day move was an area where you could have made money, and I hope we helped guide you through that. So if you take a quick look at the S&P, just to show you a chart here so you don't have to listen to me ramble, this is what I'm talking about. This was that move on Tuesday. This was that igniting bar. That was the day that we really looked bad. You want to talk about lows. This was the October low, the November low, now the December low. And now we've had a nice 3-day move, and guess where we're coming up? We're knocking on the door of bigger resistance. So for right now, the bulls have a little bit of control. They definitely do. We saw the Tuesday move. You saw yesterday. I talked about the retracement levels. I talked about 123, 122.80 to 123.20 holding in the spiders. It held. And now today you had some movement to the upside. So now, maybe tomorrow we get a little bit of upside, a little bit of a pause, but I have a hard time thinking that we're just going to break through this downtrend tomorrow. But this was a nice 3-day tradable move. So you can't ask for much more than that. And a lot of the stocks that we focused on, a lot of the sectors that we talked about, whether it was the banks, whether it was some high beta tech, they all had nice moves. If you look at the Dow, actually, take a look here. I don't know, this is the second time I put the Dow up, which I haven't done in a while. This is coming up to a pretty big area, right? What is this? 12,200. Looks like if we get above this and close above this, it opens the door. So we'll see what happens there. As far as the Qs and the NASDAQ, not leading, but it's not that much trouble, and we're not in a perfect environment right now. Inside day today, Maybe it starts to get going. We shall see. Then there are stocks that obviously are acting well or better than others. So if you look today, in the last 3 days, I've tried to be long Apple for you guys. I know I was leaning a little negative. That head and shoulders top pattern was a little ominous. But then, you had Tuesday where it negated a lot of it, so you switch gears. That's what you do as a trader. You switch gears. And Apple right now, if you look here, you will see this was the day that put it back on my radar as saying, okay, maybe I could buy the dips here. So this was Tuesday, big day, nice follow through, came right up to recent resistance. And then yesterday when Oral came out with its bad disappointment news, it came back, retested the 50-day right here. If you look, this is the arrow. Look at the arrow. Here it is. I'm coming right here because that's where the 50-day is. That's what held. That's where we said you could buy the dip if you miss this day. And then today you had a bit of follow through. Now if you look here to the left, you will see that there's a lot of resistance, a lot of old noise, a lot of old people pissed off if they bought here because we went a lot lower. So this is going to be a bit of an area to contest with. So from about 398.55 to 410, it'll be interesting to see how many days it takes to get through there or if it fails there. So if you're in anything more than a tier 2 or 3, I would have gone back to a tier 1 and then we'll see what happens there. As far as Google, it just shows you that you can have a thesis and it could take time to build. And if you look at the chart of this Google, it looks unbelievable. This upper level holding, the low here was what? 612, and now we've been knocking on the door here of a 632 to 635, hasn't been able to get above it. So if you concentrated on Google alone, you were in trouble. So I'm in tier 1. I'd love, or a little less than tier 1. I'd love to see it start to get going with some volume. You look at the weekly chart of Google, and or go to the monthly chart of Google, and you will see why this is my chart of 2012 because you have this little bit of a cup and handle coming to the high end of it. This breaks above 635. It's going to be so streaky, and you're going to see 700, 750, and I think it even goes above that. I'd love to see it announce a stock split, but I'm not in control. As far as some of the other stocks today, Baidu, Amazon, they've been acting weaker. They had a little bit of strength today. They're still in these lower pivots. I would just avoid them unless you're going to really micro scalp them. I'll show you Baidu real quickly just to give you an example. Hard to tell. Like this is actually the monthly chart. It's wedging up here after an enormous move. To me, with the micro action, it feels as if it's going to resolve this wedge to the downside. I'm not calling that yet. You had a huge move from 2009, wide range bar to the downside, engulfed. And now it does feel as if it's going to go to the downside. If you go to your daily chart, you can see here, it's still in this lower pivot, broke above it, broke below it, engulfed it today. So we'll deal with this next week. So not much you can make of it. I wouldn't be long or shorted here. I'd wait to see what the outcome is. As far as Amazon, macro pattern is still weaker. Still kind of hanging out here in this downtrend. So if you take a quick look here, you will see that here's your downtrend. Here are your ascending channels that have been broken to the downside. Ascending channel broken to the downside. Still trapped there. Take a closer look. You will see that here you go. I guess if it were to get above this area, maybe you squeeze a little bit. But until then, it's still high, lower high, lower high, lower high. That is a downtrend, my friends. So we'll see what happens if we break above it. One of the actual best 3-day trades that I feel like I've had this week was in Goldman. Goldman, made the low. Tuesday they tried to break it lower, to try and give the bears some kind of ammunition for the rally not to take place. It was a great buy. Then yesterday it traded through 91.50. Today it traded through 92.20. I don't know why I remember those numbers, but that's just the red dog. That's what I do. If you look here at Goldman Sachs, you will see that it had a nice move. This was the line I drew in the sand with, I think, Jill this morning. And here you go. This was Tuesday. Wednesday nudged above it. Today was a little bit cleaner, coming into resistance. Nice 3-day move. You don't have to be a believer in Goldman Sachs. You don't have to like Lloyd. You don't have to think that they are going to take over the world. All you had to know is when we came in, we held this recent bottom, descending channel broke above 91.50. Why not play it for cash flow? So for here, I'm small. We'll see if it can continue higher, but here you now you have a high, a lower high, and we're getting to that area where it's going to have to prove a lot more to just bounce here. And if you were looking for cash flow, this is your spot. As far as some of the ags acting well, gold, in my opinion, a lot of people are saying, Red Dog, you've been so awesome with gold. 2008, you said it's going to 1,500. It went there. This year, you said 1,700 to 1,800. It went to 1,900. What do you think now? Why aren't you trading it every day? Because there's better action out there. But I will say, I put a 75% chance in the blog that we go to 1440 before we go back to 1740. So if you want to trade it from a net short position, that's what I'm seeing technically. If you look here on the GLD, you will see that not much of a sustained bounce ever since a few of these technical patterns. Here's your outside day. Here is that first wedge where if you look a little closer, you'll see you had a mini reversal right here. This got you out before this moved lower, went sideways, retraced back, retested, couldn't get through it. The downtrend trapped it, went lower, and then here's your macro wedge broken to the downside. And not much of a rally here, guys. If people thought gold was that cheap, it would be bouncing that much faster. It tried to get through the 200-day, it couldn't. So to me, I put a note out there saying that I do think that we see this 140, 145 in the GLD well before we see it retake back this broken trend line of 165 to 167. So hopefully that gives you some basis to trade against versus just your own ideology. And really that's it. It is Thursday. We're in the midst of a holiday 2-week time period. A lot of people have left for vacation. If you're here, and hopefully you've been following me a little closely, you've seen that the last 3 days have been very strategic, from the Tuesday gap and go to the Wednesday buying the dip to today's follow through. So the meat and potatoes of this 3-day move, I think, should have been booked. Can we continue forward? Yes. Do I think it's going to be very tough to trade through 1259 on the S&P and 1260 to 1266 where that resistance is? I don't think we could just blast through it during this holiday season, but I guess crazier things have happened. And just reflect a little bit. Reflect on what's taking place over the course of last year, what you've seen, what you've acted on, how you've performed, because everyone has their own inner demons. And if you had a hard time getting short when we broke 1250 and cascaded to 1100, that's fine. Work on that next time. If you saw that reversal day, the outside day, the day to take notice that we pointed out in October 4th, and it was hard for you to switch gears, you take notice. If you overtraded through this choppiness of whether we were trying to figure out if we would hold between 1200 and 1260 and you think you did too much, take notice. There are a lot of things you can learn from your own actions, and unless you're accountable, unless you're honest with yourselves, you're never going to see it. So if I were you, I would write down a list of everything you did well in 2011 and everything you need to work on in 2011 so you make 2012 a better environment for you to trade, a more profitable environment for you to trade, because again, the market's going to be here well beyond our years, and it's all about how you approach it, how you change, how you maneuver, and that's why we're here to help you do that and do it together, because it's a work in progress for us all. And like I always say, a few thousand eyeballs are better than two. If you're a member of T3Live, you have those eyeballs working for you. You have a community that's on your side, and will continue to work against them or they. Everyone's always like, who are they, Red Dog? They are not us, and I think our group and our community is getting bigger where we could overpower them as far as the thought process and the intellectual capacity, because there's a lot going on in our chat with our content providers, and I think the more you can learn about it and get out of it, the better you will maneuver and the more profitable you will be. I will see you tomorrow morning at the morning call, and then it's Christmas. Hopefully Santa brings some presents that you want delivered on your sleigh. See you then. Have a great night. Scott Redler, T3Live, the recap. See you in the morning.